Welcome to this special edition Markets Daily from Consensus 2025's.
Bitwise Asset Management is a leading crypto asset manager driving institutional crypto adoption with its low-fee Bitcoin ETF attracting billions in inflows and seeing client allocations rise from 1% to 3% in recent months. Chief Investment Officer Matt Hougan is no stranger to CoinDesk and bold forecasts, including a $200,000 Bitcoin price target for 2025. Matt, we got a lot to talk about. All right, first of all, this $200,000 price target for 2025 right now, Bitcoin is at about $103,000. What are the catalysts that are going to get us to 200?
Yeah, it's great to be here. The short answer to that is demand and supply. The thing about Bitcoin right now, the reason this is the best moment in history to buy Bitcoin on a risk-adjusted basis is there's just too much structural demand for the amount of supply in the network. Bitcoin only produces 165,000 Bitcoin per year. Last year, ETFs bought 500,000 Bitcoin. I think they may buy more than that this year. Add on corporate buying and government buying. There is just too much demand. I don't think anything stops the train. We feel more confident about that $200,000 prediction today than we made it in December of 2024.
That being said, Bitcoin is now a bit range bound. We've seen between 100 and 105,000. What's going on?
Yeah, so there are select number of sellers who have been willing to sell around the $100,000 point. Why? Because people are human. Some of that selling has come from FTX, some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that, and then I think we end the year above 200K.
You all have done an amazing job of helping educate the market and bringing that kind of first 2024 year of Bitcoin adoption, getting the momentum going. I think with the rest of crypto, a lot of the education has to take place. There's, what, a $250 billion of stable coins that need layer ones. There's RWAs that need layer ones. There's meme coins that need layer ones. Yet, I think people, the everyday investor still needs to ascertain or get a little bit more confidence with everything else outside Bitcoin. How's that going? What are your next steps?
Yeah, I'll say that story has started to shift. You know, before I came to this event, I was at a major regional broker-dealer financial advisor event. They managed about $500 billion in assets. I had 5 times the number of questions about Ethereum than I had at any conference before that. And the reason was the things you were saying. People are wondering, how do I invest in stable coins? How do I invest in tokenization? I think as they start to knit that together with what that means from looking down chain beyond Bitcoin, we're going to see some diversification beyond Bitcoin. Bitcoin is still king of the hill. It's still going to attract the most flows, but I think people are probably too skeptical on ETH and Solana flows into traditional financial products. I think it's going to hit up, sort of tick up at the end of the year.
How critical will staking yields be? We saw, Europe, now Canada, is that little trickle of dividend-like income, although it's not dividends, right? Dividend-like income coming on top of an ETF holding. Does that add enough kind of spice into the equation?
I think it's helpful, but the real story is ETH properly, right? ETH went down, 60% from its all-time highs. If you staked and earned a few percent, you were still sad. So I think most people are betting first and foremost on ETH. The staking will be nice. It will be a reason to buy the ETF and not do it directly, but it's not a game changer. The game changer for ETH is the change in the Ethereum foundation. The game changer is the success of the Pectra upgrade. The game changer is maybe stablecoin and market structure regulation. I would look to those things more than I would the addition of staking if you want to see ETH ETFs go to tens of billions of dollars.
Right, and do you think people are starting to knit together the use cases of DeFi and what ETH is trying to do? Maybe the stablecoin legislation is a pivot point there, or are people starting to get that? Because the Bitcoin story is pretty locked in. The growth story is still a bit ethereal, to use
Yeah. I think they're starting to, but I don't think we're there yet, right? I think that you need to knit together a few positive stories, and you really need to see the inflection. I think if we get stablecoin legislation passed, that'll be the next sort of leg in the stool. I think it'll be helpful. Look, I'm very optimistic for ETH long term. I'm less certain in the intermediate term. I think in the intermediate and short term, the story for Bitcoin is very clear, that demand-supply mismatch. I think ETH has more work to do. But I do think investors are looking at it as maybe almost a value play in crypto. Those aren't words that we use very often. Often the hype exceeds the fundamentals. It may be the case that the fundamentals are exceeding the hype on ETH. That can be interesting for people with, let's say, a 2-year time frame.
Right.
What are some of the macroeconomic factors that you're looking at that will impact the crypto markets? We see with the tariffs that had a lot of global uncertainty around trade, and that spooked markets earlier in April, but now they seem to be rebounding, as well as what the Fed might do and what U.S. Commerce Secretary Scott Bessent might be doing with the Treasury buybacks. What are you looking at?
Yeah, the best thing that can happen from a macro perspective is us not talking about it and not worrying about it. I mean, the crypto-specific drivers are so positive right now. I think we would be much higher today if we hadn't gone through this crazy V-shaped macro thing. It distracted all of us from the fundamentals being so strong in crypto. So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto-specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen, and if that's true, it's going to be a great rest of the year.
That being said, Bitcoin was kind of a mooring, in mid-April, and then sprang back to life as an all-time high seeker, right?
Yeah, I think that's right. Well, I do think we learned something from the April sort of tariff tantrum.
Yeah.
This was the first macro shock where traditional investors could access Bitcoin. If you go back to previous macro shocks like the taper tantrum or the last China trade war in 2018, traditional shops couldn't use Bitcoin as a tool. There weren't ETFs, there weren't regulated futures. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset, and macro is sort of on the sideline.
Yep, and you're talking to them. Thanks for the update, Matt.
Thank you for having me.
Hey. That was Bitwise Asset Management Chief Investment Officer, Matt Hougan. Later in the program, Robinhood and WonderFi will be joining us to talk about their latest merger. Keep watching CoinDesk Live at Consensus 2025 for more.